Why is no one selling? Housing supply and listings crash. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at, well, property listings here in Australia, housing listings, and ask ourselves, why is no one selling? This is the article that got me interested in this. Why? There's not enough property for sale right now. And of course, this is from Domain. And, they put a few suggestions forward. But first, let's have a look at the current property listing data. Now, this is from SQM. And I'm just going to turn off this highlighter. And we can see over here, right now, our total listings at the moment in Sydney is 27,000 properties. You can see under 30 days is 15,000. The top showing how 30 days. We've got 30 to 60 days, 60 to 90, 90 to 180, and property over 180 days. I don't know why you would have property for sale or listed for over 180 days. Now, Sydney, it seems to be, was going down. 2000, it shot up, and now 2021, it's come right back down, everyone. And if we have a look here, this is showing you the breakup of houses and units. So we can see houses and units both have gone down. Listings are going up slightly from one month to the next in Sydney. We can have a look here at Melbourne. We can see a similar type of thing where there's, slightly going down. They definitely peaked at the end of 2020. And there we go. Just jumped up a little bit in March. We can see here Melbourne. And this here is in Brisbane. Now, Brisbane listings are definitely going down. So Melbourne, Sydney, you'd say, or maybe dropped a little bit from last year. Or significantly from last year. Brisbane, there you go. Quite a steady slope down. I mean, who would have a property on the market for 180 days, guys? Wouldn't real estate agents, don't they do the trick where they take it off and put it back on, take it off and put it back on? Wouldn't you be worried if it's there for half a year? How desperate would you be trying to sell? Everyone. We have a look here and we can see as well, houses have gone down significantly. So, in October last year, they were at 21,000. March this year, you're down to, 16,000, everyone. Here in Brizzy. Canberra, we can see the same thing, trending down. There you go. Everything is heading down from where it was. Look at Darwin. Look at those listings in Darwin, everyone. That's a big slope down. There you go. You've got houses and units. They're starting to creep up again. Adelaide, look at that. Once again, sloping down. Sloping down from houses and units. Hobart, this is the most drastic one. Look at this change over time. I've been constantly asking, why is property so expensive in Hobart? What's going on? Why is it catching up to the rest of the country? Look at that. Guys, those of you in Tasmania can tell me. Look at the units. Would you want to even get a unit in Hobart? Perth, it's also sloping down a little bit. Not as drastic as Hobart. I think Hobart has been just the most drastic example here. Now, government to the rescue. I want to highlight this just so everyone is aware that we've had significant government intervention in the market. Okay, they are keeping zombie companies alive. As we said, we've got companies trading while insolvent. We can see here, these are external administrations. They've been going down. Starting to jump up again, but you can see they're definitely below where they should be. Even if we just hit halfway, or even if we just go back up to where we were, the normal level of insolvencies during all the good times. Remember, all of this was good times. This was the GFC back here. Okay, and then businesses go down. They're generally, it hasn't been too bad for some time, so we've been in good times, but there's 5,000 expected in the next 12 months. JobKeeper, up nearly 9% of the Victorian workforce was on JobKeeper. Oh, that chart's gone missing. I'll fix that up. But, their zombie companies have been kept alive. They're juicing the housing market. The cash rate is 0.1%. You've got dwelling approvals have shot up because of home builder. Remember, 3% used to be an emergency rate, guys. home builder grants up to 88 grand when you count the stamp duty and all the other handouts they're giving you. You've got 5% government loan guarantees. We have people in articles that are complaining that their friends who are just not sensible enough with their money are withdrawing their super out and then getting a government loan guarantee and getting in the property. Negative gearing, well, that's a long-standing issue that I would argue we're starting to see the ramifications of it, and super withdrawals as well. So all of these things have come together. We're not in a natural environment right now. You've got reduced housing supply. Councils are restricting supply. You've got lobbyists and activists doing the not in my backyard, wanting to restrict development, because that always increases the cost of their, well, the value of their properties, and then can increase their rent. We're also seeing, actually, in Victoria now, and I have to add that to this slide, and you know what? I think I just will, so it's there, but, increased government regulation, everyone. Increased regulation, which is driving people, landlords, rental providers now? We're rental providers if you've got a property. Increased regulation are pushing rental providers out of the market because of the frustration. What really got to me was that you could be late 4 times with rent payments in a year and not be kicked out. So what if you're depending on that money? And you can approve repair work up to $3,000. You can, paint any walls that you want. I didn't understand. I lived next to a guy when we were renting in Kangaroo Point, and this guy was a bit of a nutter, alternative lifestyle guy. And he painted the house. He painted the neighbor's house. He got permission. He went and spent his own money, and he painted it this horrible purple. But the idiot used this type of paint. Number one, I don't know why you would spend money on someone else's property, someone else's investment. It just doesn't make any sense to me. You're not going to get any credit for your rent, nothing like that. Maybe, if you do get credit, maybe you should, but still. He painted it with a paint that was used around pools, which had anti-slip coating in it. Can you imagine that on the side of a Queenslander? Oh, they were happy to get rid of him. We also had, loan subject to repayment deferrals. We had the mortgage holidays, guys. That's completely unnatural. And our saving rate has skyrocketed. Money's just flooding it, so people are cashed up. So we've got all these things combined, everyone. We've got property listings going down. We've got government to the rescue. Oh, and I want to highlight this as well, just to show how drastically the complexity of Australia's economy has decreased since the 90s. Since 99. Those of us that are old enough to remember. I mean, guys, this has been within our lifetime. And, I bet you the first homeowner grants were the start of it back when they introduced GST, and it just got the snowball going. Because our GDP growth per capita, we're still growing. GDP is still growing. But our population growth has increased so much, our GDP growth per capita has been below trend since the GFC. Our economic complexity is going down. All we do is dig holes, serve coffees, and sell houses. So, housing supply has crashed. Listings on the market are down. Let's have a look at what Domain is talking about this. The number of property listings on the market slumped in the run-up to Easter, leading to fears home prices will surge further as demand continues to outpace supply. And I've got some questions as to why that might be happening, or at least one theory to put on the table to you. With the volume of houses and units for sale in Sydney dropping last week by 12% over the week before, Brisbane by 8%, Adelaide 9.7%, and Darwin by 11.4%. Melbourne showed a minuscule rise of 1.5%. And Victoria, well, it was the state with the largest amount of people who were on JobKeeper, everyone. And, one thing we'll see here, actually, I will just bring up this chart. Another thing with Victoria, everyone, is regards to the Melbourne listings. So Melbourne rents are falling. Everyone here, we can see that. I mean, there you go. Melbourne rents are going down. The weekly rents that they're getting on their properties. We can see the rental listings here. Look at that. We looked at this before, how it's just shot right up, everyone. That's nuts. So no wonder, and this is units and houses. So units are really copying in Melbourne. No wonder people are perhaps considering selling in that market, and why we're having an increase in property, an increase in properties that are units. Just saying. Just saying. With migration down, international students down, that could explain that. So, the only exceptions to the downward trend were Hobart, where listings rose 18.7% for the week to March 28th. Canberra, the week to March 28th, Hobart's going up, but look at the trend in Hobart, guys, over the time period. You know, it's just, okay, it's up slightly, but look at that. Yeah, okay. It may be up week to week, it may be going good, but the long term, people are wanting Hobart, guys. What's going on there? I mean, don't get me wrong, I love Tassie. Very cold. Apparently Hobart's the driest city, someone mentioned in the comments. I only think of it as wet because when I was down there it was so cold. It actually didn't rain. That would be even worse. So, while many vendors tend to avoid the Easter break as it can prove disruptive to a sales campaign, especially with school holidays and Anzac Day, it seems there are mightier forces at work. I think we're currently seeing a depletion of current stock in the market where buyers are absorbing all the old listings as well as the new, as there's a real shortage of supply, said Domain Senior Research Analyst Nicola Powell. There's likely a transition into stronger price growth. So there'll be a point at which affordability is going to bite, which will end up deterring some buyers, especially first home buyers. Most markets are really robust, Dr. Powell said. Well, housing affordability is an issue, everyone, and I will just bring up a chart. Now, this is a report from the 30th of the 6th, 2020, but what it shows you, and I thought this is quite a good chart, that's why I keep going back to it. It's a Lorenz curve. Everything above the black line. So here in Brisbane, if your income is 70%, you've got access to about 70% of the property. Okay? So if, say, in another city, what do we say? Let's say you've got 20%, you're in the bottom 20% of income in Brisbane, you've still got access to 40% of the property, and that's discussed as affordability, 30% of your disposable income. So right now, Brisbane and Perth, we're the only ones where there's any chance of housing actually being affordable compared to all of the other states, everyone. So we're seeing strong demand in housing finance. Remember, that was last year. Now we've got more interventions in the market, so that's increasing that a bit. But still, housing is affordability. What happens if interest rates go up, guys? We're seeing strong demand, higher house finance, and in Sydney we're seeing a clearance rate of over 80% for 8 weeks in a row. While in Melbourne last week we saw the highest volume of auctions since 2018. Now remember, clearance rates, it's not a rocket science, guys. Just take it as an indication of trend, okay? Because there's a bit of variation in those potential results. The monthly figures show low listings too, actually dropping 11.8% in Darwin over the previous month and rising only to 4.5% in Sydney, 1.8% in Brisbane, and 8.6% in Melbourne, and jumping by a substantial 14.5% in Adelaide. In Hobart, the monthly rise was tiny at 2%, Canberra 2.1%, Perth listings leapt up by a massive 25.8%. But with low listings over most state capitals, the danger is that the shortage of stock could spiral, with a lack of supply dissuading potential vendors from putting their homes on the market in case they can't find anything to buy. I mean, that's another issue there. Remember, we have uncertainty, everyone, and I would argue that that is being manifested here in this with regards to the saving rates going up. That, I would say, more than consumer confidence. You know, we've got all the consumer confidence surveys that's, you know, anecdotal evidence that they quantify. You know, do you think it's going to be better next year? This is the real sign right here. This one here, this will tell you what people really think, how much they're stashing away. And now it's starting to drop down. Maybe confidence is returning a little bit. But are you going to sell and jump into the market if you're not sure you can find anything? That's insane. So that's true for some pockets of Melbourne, said Margaret Duncan of Bell Property in St Kilda. She's struggling with a lack of stock generally and a lack of bigger family homes in huge demand after the lockdowns made locals keener to have more space for future in particular. People now want to buy something a bit bigger because they've spent so much time huddled together. They can't bear the thought of doing that again. There you go, cultural shift. What about as well, we can work remotely too. That's changed. That's something to consider as well. But for everyone, we sell, we have the underbidder and the underbidder bidders all looking for more, and people not wanting to sell in case they can't find something. So maybe now is the ultimate time if you are a downsizer. You know, you're close to retirement. You're thinking, you know what, let's just sell the place and we'll buy a little unit somewhere in the city. But with such a lot of competition for limited listings, it's pushing prices up and up. In Sydney, it's the same story. Listings are down now, but everyone's hoping they might pick up after Easter, yet there are no guarantees. There's a 100% shortage of listings, and I can't really see when they're going to free up, said Debbie Donnelly of PPD Real Estate. It's an absolutely crazy market, and it looks about to get crazier. A 2-bedroom apartment she recently sold on 8th Avenue, Darling Point, in original 60-year-old condition, had a reserve of $2 million, but sold for 3.3. A reserve for 2 sold for 3.3. And at the same time, as a 2-bedroom house, also unrenovated, sold for 2.4 instead of the $2 million. That kind of frenzy is being felt across the country. In Canberra, Luke McLoof of Lawton Property has just had 100 groups through a 3-bedroom house. 100 groups. On its first inspection, and 80 through the property, another property in Taylor. There hasn't been a chance for stock to keep up with demand, he said. Supply just can't keep up. It's hard to say when it'll ever even up or slow down. In Brisbane, the low number of listings with only 1.8% rise over the month is also putting pressure on prices. We've had an undersupply of property for the last 3 months, and the market is coming through very strongly with some good sales, said Jackson Everton of Ray White Sherwood. With low listings, we're achieving good prices, but the momentum going forward, we feel, will encourage people to put their properties on the market in the hope of getting 15, 20 or 25% over what they might have gotten 12 months ago. And then worst case scenario, they'll just rent a unit until more property comes on. So that's what the agents are telling us. Here's a suggestion, a question I put to my audience. What would Aussies buy when they're worried about inflation? Now we're starting to see, money supply increase everywhere around the world, particularly in the US, and I'll do a video on that later. There's talk of a silver squeeze. Crypto is going to the moon. Gold and silver kind of sitting pretty there. But what would Australians buy? And this is the question I put to everyone. And you can still vote in this poll, guys. If the average Aussie, or average normal Aussie, okay, that's a normal person, a normie, not a prepper, not someone who watches, John Adams for silver or Schiff, not someone who's worried about property. No, a normal person, everyone, was worried about inflation. What do you think they would buy with their money? What do you think they would buy with it, guys? And, 23% said gold, 10% said silver, 17% said Bitcoin, 42% said property, everyone. 42% said property. And 9% said shares or other. Okay, and the question was if you think the Australians are worried or not, but what do you think they would buy? And this is just now, we've got another 100 votes, and the results have gone slightly down for gold and silver, down for Bitcoin. Property is now at 42%. And let's have a look at some of the comments people have put in here. A train ticket to Centrelink, okay? The average Australian won't do much of anything at all. This is the thing, If they can't see that living on paycheck to paycheck and in debt is a financial hazard, then why would you even have the resources, let alone the knowledge to do anything, okay? So old bloke is kind of a bit cynical about the average Aussie, and I agree. I mean, we see just some of the lack of responsibility or understanding of financial literacy in the media, but still, if people are worried about inflation, you're going to start seeing it. Petrol's getting more expensive. Food is getting more expensive. There's more to talk about it in the media. Gresha says beer won inflation. Paraguay Mike is saying a case of Foster's and frozen shrimp. As an American, we don't actually buy Foster's here in Australia, mate. I think I saw it once at a pub, and I was surprised, or at a bottle shop. I mean, isn't it just rebranded Forex or VB or something? I selected property, however, I'm not sure the average Aussie can afford property significantly enough to hedge against inflation. Property because Australians only know one asset class, or KFC nuggets. And we got prepper, pantry seats, chicken seats. Average Aussie isn't going to buy that rate. Average Aussie, normies aren't going to. I think they're going to go into property. I like property. Property is a full-blown religion in Australia. So perhaps this is why we're seeing this drive into property, or this decrease in listings, everyone. Particularly, I mean, if we have a look here, Sydney, it's gone down from last year. You know, Melbourne, yeah, kind of definitely down from the peak. Brisbane, down. Canberra, down from the peak. Darwin, down. Hobart, oh boy, Hobart, guys. So, that combined with the uncertainty and all of the interventions by the government that is juicing up the market, perhaps that is why we are seeing people drive into property. What do you reckon? Are they buying property as a way to protect their assets? Or they're worried about inflation, that their purchasing power of their money is just going to evaporate? Technically, the traditional definition of inflation is simply an increase in the money supply. It's got nothing to do with prices. And then the price increase is the outcome of that inflation, and this is the Candlelight effect. Refers to the change in relative prices resulting from a change in money supply. The change in relative prices occurs because the change in money supply has a specific injection point, and therefore a specific flow path through the economy. And in Aussie land, maybe it's property. So solutions, everyone. I'm going back to good old long term. We need to get off our dependency on property. That's the problem. It's what's resulting in the decline in economic complexity. Everyone uses it as a way to mitigate their tax, as a way to get... People want to use it to get rich. That's what they think. Everyone gets into property. Use it to build wealth, build wealth, build wealth. We need to get off that dependency. We need to look at phasing out or removing negative gearing, getting rid of that intervention. We need to look at special economic regions in the country where we free the market to allow some innovation in employment legislation and in manufacturing. What do you reckon? Do you think it's even possible? Do you think Australians are buying property as a hedge in inflation? Do you think we'll suddenly see a whole lot of people flood the market with their property? Will there be a crash in property if no one sells? What do you think? Will rising interest, will the cash rate, which is sitting here at 0.1%, if that shoots up to 4 or 5%, how many people are going to fall over? And then we might see property hit the market. Or how many people have locked in? Anyway, guys, thank you all for watching. Please let me know your thoughts or opinions on this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can also use Perth Mint or buy our merch. Take care, guys. Have a great day, and I'll see you in the next episode. Bye for now.